Bitcoin is not just a passing trend or a speculative bubble. It's the future of money, and 2024 is the year to stake your claim. In a world where traditional investments are losing their luster, Bitcoin stands tall as the revolutionary asset that has already transformed lives and will continue to do so. But to truly benefit from this digital gold, you must be strategic, informed, and most importantly, decisive. Are you ready to make the bold moves that will secure your financial future? Bitcoin has come a long way since its inception in 2009. From being dismissed as a fringe technology used by a niche group of enthusiasts, it has evolved into a global financial powerhouse. Today, Bitcoin is not just an asset, it's a movement towards decentralization, financial freedom, and a more transparent global economy. In 2024, Bitcoin stands at the precipice of a new era. With global economic uncertainty, inflation on the rise, and traditional investments like stocks and bonds facing turbulent times, Bitcoin presents an unparalleled opportunity. But with opportunity comes responsibility. Investing in Bitcoin isn't just about buying and holding. It's about understanding the market, recognizing the risks, and adopting strategies that align with your financial goals. Before diving into how to invest in Bitcoin, it's crucial to understand why Bitcoin is so valuable. Bitcoin is often compared to digital gold, but it's much more than that. It's a decentralized, borderless, and censorship-resistant form of money that operates outside the control of any government or financial institution. The global economic landscape is shifting. Traditional currencies are facing unprecedented challenges, from inflationary pressures to geopolitical instability. Central banks are printing money at an alarming rate, eroding the value of fiat currencies and leaving savers at a disadvantage. In this environment, Bitcoin offers a unique value proposition. It's a deflationary asset with a fixed supply of 21 million coins, making it immune to the inflationary pressures that plague traditional currencies. Bitcoin is also decentralized, meaning it's not controlled by any single entity. This decentralization ensures that Bitcoin remains a truly global currency, free from the manipulation that often affects fiat currencies. In a world where trust in governments and financial institutions is eroding, Bitcoin's decentralized nature makes it an attractive option for those seeking financial sovereignty. In 2024, the adoption of Bitcoin continues to grow at an exponential rate. Institutions, corporations, and even governments are beginning to recognize Bitcoin's potential as a store of value and a hedge against economic uncertainty. Companies like MicroStrategy and Tesla have already added Bitcoin to their balance sheets, and more are expected to follow suit. This growing adoption is a strong indicator of Bitcoin's long-term value and stability. Furthermore, Bitcoin's network continues to strengthen, with more miners, developers, and users contributing to its ecosystem. The Bitcoin network is more secure and resilient than ever, making it an increasingly attractive investment for both retail and institutional investors. Another critical factor to consider in 2024 is the upcoming Bitcoin halving, expected to occur in 2024. The halving is a pre-programmed event in Bitcoin's code that reduces the block reward for miners by half, effectively cutting the rate at which new Bitcoin is created. Historically, Bitcoin halvings have led to significant price increases, as the reduced supply combined with increasing demand creates upward pressure on the price. Investors who understand the dynamics of the halving and position themselves accordingly can benefit from the potential price appreciation that often follows. However, it's essential to approach this event with a long-term perspective, as the market can be volatile in the short term. Now that we've established why Bitcoin is such a valuable asset, let's dive into the best ways to invest in Bitcoin in 2024. Whether you're a seasoned investor or a newcomer to the crypto space, there are several strategies you can employ to maximize your returns and minimize your risks. Dollar cost averaging is one of the most effective and straightforward strategies for investing in Bitcoin. It involves investing a fixed amount of money into Bitcoin at regular intervals, regardless of its price. This strategy helps you avoid the pitfalls of trying to time the market, which is notoriously difficult even for experienced investors. By investing regularly, you average out your purchase price over time, reducing the impact of market volatility. This approach is particularly useful in the highly volatile cryptocurrency market, where prices can swing dramatically in short periods. Dollar cost averaging allows you to build a substantial position in Bitcoin over time without the stress of trying to buy at the perfect time. The buy and hold strategy, often referred to as hodling in the crypto community, involves purchasing Bitcoin and holding onto it for an extended period, regardless of short-term price fluctuations. This strategy is based on the belief that Bitcoin's value will continue to increase over the long term as adoption grows and its scarcity becomes more apparent. Hodling requires patience and conviction, especially during periods of market downturns. However, those who have adopted this strategy in the past have often seen significant returns on their investments. The key to successful hodling is to have a clear long-term vision and to avoid the temptation to sell during market dips. While Bitcoin is the most well-known and widely adopted cryptocurrency, it's not the only one worth considering. Diversifying your investment across different cryptocurrencies can help spread your risk and increase your potential for returns. In 2024, several altcoins, such as Ethereum, Solana, and Cardano, are gaining traction and could offer substantial growth opportunities. However, it's important to approach diversification with caution. Not all cryptocurrencies are created equal, and some may be more speculative or risky than others. Focus on projects with strong fundamentals, active development teams, and growing communities. By diversifying your portfolio, you can capture the upside potential of emerging projects while still maintaining a solid position in Bitcoin. For those who prefer a more traditional investment approach, Bitcoin exchange-traded funds, ETFs, and funds offer a convenient way to gain exposure to Bitcoin without the need to manage the underlying asset. In 2024, the availability of Bitcoin ETFs is expected to expand, providing investors with more options to invest in Bitcoin through regulated financial instruments. Bitcoin ETFs track the price of Bitcoin and allow investors to buy and sell shares on traditional stock exchanges. This approach is particularly appealing to institutional investors and those who are hesitant to navigate the complexities of buying and storing Bitcoin directly. However, it's important to note that Bitcoin ETFs come with management fees, which can impact your overall returns. While Bitcoin itself cannot be staked, as it's a proof of work, POW, cryptocurrency, you can earn passive income through staking or yield farming with other cryptocurrencies. For example, you can stake your Ethereum or participate in yield farming protocols on decentralized finance, DeFi, platforms. By generating passive income from these activities, you can reinvest your earnings into Bitcoin, effectively growing your Bitcoin holdings over time. This strategy requires a deeper understanding of the DeFi space and the associated risks, but for those who are willing to invest the time and effort, it can be a lucrative way to accumulate more Bitcoin. While the potential rewards of investing in Bitcoin are significant, it's essential to be aware of the risks and challenges that come with it. Bitcoin is still a relatively young asset class, and its market can be highly volatile. To navigate these risks effectively, you need to be informed, prepared, and resilient. One of the most significant challenges of investing in Bitcoin is its volatility. Bitcoin's price can fluctuate wildly in short periods, driven by market sentiment, regulatory news, macroeconomic factors, and technological developments. While this volatility presents opportunities for profit, it can also lead to significant losses if not managed properly. To mitigate the impact of volatility, consider using strategies like dollar-cost averaging and diversification. Additionally, maintain a long-term perspective and avoid making impulsive decisions based on short-term price movements. Remember that Bitcoin's value proposition lies in its potential as a long-term store of value, and its price fluctuations are a natural part of its growth. As Bitcoin gains mainstream adoption, it has attracted the attention of regulators worldwide. While regulation can bring legitimacy to the cryptocurrency market, it also introduces uncertainty. Changes in regulatory policies, such as increased taxation, restrictions on crypto trading, or limitations on the use of Bitcoin, can impact its price and adoption. Stay informed about the regulatory landscape in your country and globally. Engage with the crypto community and advocacy groups that work to promote favorable regulation. By staying informed and proactive, you can better navigate the regulatory risks associated with Bitcoin investment. The decentralized nature of Bitcoin makes it secure from censorship and control, but it also places the responsibility of security on the individual investor. Managing private keys, using secure wallets, and safeguarding against hacking and phishing attacks are critical aspects of Bitcoin ownership. To minimize security risks, use reputable hardware wallets like Ledger or Trezor to store your Bitcoin securely. Avoid keeping large amounts of Bitcoin on exchanges, as they are vulnerable to hacking. Educate yourself about common security threats and adopt best practices to protect your investment. Investing in Bitcoin requires a strong mindset. The market's volatility can lead to fear, uncertainty, and doubt, FUD, which can cause emotional decision-making. On the other hand, the fear of missing out, FOMO, can lead to impulsive buying at the peak of market cycles. To overcome these psychological challenges, develop a clear investment plan and stick to it. Set realistic goals, define your risk tolerance, and avoid making decisions based on emotions. Surround yourself with a supportive community of like-minded investors who can offer guidance and encouragement during challenging times. Bitcoin is more than just an investment, it's a movement towards a more transparent, decentralized, and inclusive financial system. By investing in Bitcoin, you're not just securing your financial future, you're also contributing to a global movement that is changing the world. If you found this information helpful, please give this video a big thumbs up. Your support means the world to me and helps me create more content like this. Don't forget to leave a comment below, sharing your thoughts or asking any questions. And if you know someone who would find this useful, hit that share button. Together, we can grow this community and learn together. Thanks for watching, and I'll see you in the next one.